following program is a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com or search for Options Insider Radio in iTunes.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block. With your host, Mark Longo from theoptionsinsider.com and co-hosts Mike Tusaw from KnowYourOptionsInc.com and Mark Sebastian from OptionPit.com. The Option Block is brought to you by Options Express. Don't spend time worrying about your broker. At Options Express, security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets, established financial stability. Options Express lets you trade with confidence. Stocks, options, and futures, all in one account. Trade with a specialist. Visit optionsexpress.com/OXradio to open your free account. Options Express is a member of FINRA, SIPC, and NFA.
All right, everybody, welcome back to the Option Block. We are, of course, your bi-weekly source for all things options related. My name is Mark Longo from this here Options Insider Radio Network, as well as a little thing we call the optionsinsider.com, upon which you can find articles and analysis about all the stuff we're talking about on this show and a heck of a lot more. All the unusual activity, education, analysis, a lot of breaking news from the options market, from which we pull a lot of stuff for our trading block and a lot of other great stuff up there, including all of the other fantastic programs on the Options Insider Radio Network, and of course, all of the many hundreds of archived episodes of the Option Blocks. You can find it all there, theoptionsinsider.com, or of course, in your podcast provider of choice. And joining me on the old show today, we have a little bit of a trimmed panel, because the boys over at Option Pit are having their big client hoedown, so they are unable to join us. They are off feasting on lobster and steak and whatnot, and probably playing a little bit of golf too while they're at it. But never fear, listeners, we have some able stand-ins, starting off with the man beaming in from right down the street and wearing the fanciest hat of all. He is, of course, the Viceroy, a.k.a. Alex Jacobson from Options Express. Mr. Viceroy, welcome back to the show, sir.
Hey, Mark. Good to be here today. A lot of news today, decent market. At least we didn't sell off too much near the close. Lots of good economic news. I actually thought we would have been higher today. The one drag, I think, was the 10-year today, bouncing up over 270. And I think we got to keep a real close eye on that.
All right, and also joining us, holding down the RCM hot seat today for his second show here as a co-host. A bit of a trial by fire. He's going to be carrying the entire show, listeners. I'm going to toss it all on his shoulders. He is Matthew Bradbard. He is the Futures and Futures Options Major Domo over there at RCM Asset Management. Matthew, welcome back to the show, sir.
Yes, glad to be here. Like Alex said, not a dull moment. Record highs in the Dow, record highs in the S&P. Oil markets getting active. You had a couple central bank meetings today. Of course, the Fed meeting yesterday. Non-farm payroll tomorrow. A lot of stuff to talk about today.
So let's get right into it and dive right into the trading block.
The Trading Block.
All right, everybody, welcome to the old trading block. This is, of course, the portion of the old program where we break down some of the interesting action that caught our eye on the street today. And as we alluded to at the top of the show, was indeed a sea of green across most of our trading screens, with the S&P, the NASDAQ, and the Dow all closing substantially up. S&P breaking that also important 1700 level, closing today at 1706, nearly 1707, up about 1.3%. on the day. NASDAQ leading the charge a little bit further, up 1.4%, 236.75, and the Dow closing up nearly 1% to 15,628. I know, too bad Uncle Mike Tusaw is not here. He was very keenly interested in that 1,700 level in the S&P. I'm sure he was doing all sorts of backflips there in the RCM St. Charles office when it finally crossed that level today. Of course, a lot of the rally stemming from some good data coming out of all the numbers we had this week. We had strong manufacturing data, which I think took a lot of people by surprise. Also, unemployment claims coming in at a 5.5-year low, so the combination of those really seemed to just shoot the market up into just the stratosphere and never really looked back. People have been talking a lot maybe about the potential for retracement, for a bit of a pullback. Now they're at these highs, and the market just shrugged that talk off today because it was off to the races. Mr. Alex, what caught your eye, if anything, over there in the land of OX today in the midst of all this rally madness?
As you said, Mark, it was pretty much across the board. Everything except Exxon and Shell today. And I think if you do the calculation, the Dow would have been up, I forget what the math is, but another, whatever the drag down was from Exxon. But Europe was up, Asia was up, all the news was good. I thought we would have been up more. So maybe the show is rubbing off on me. I thought we should have had a bigger rally today. The ISM number was just outstanding. And ISM number has always been a statistic that I think has been key in terms of what the market was doing. The only cloud over what was going on today is the 10-year took out 270, and the volatility in the 10-year has been huge again. And Matt talked about this a little bit. We had a big rally in oil today, obviously not in the oil stocks, but in oil, and hoping he'll talk a little bit about that later because the contracts are converging. So interesting stuff going on today in both the equities market, the energy market, and 10-year over 270. So that's got me a bit nervous.
I think all of us pessimists here on the show, Alex, are finally starting to rub off on you, and all of your sunny optimism is starting to wear away as you've been doing the show with us now for a while, and our cynical outlook is infecting you. But, of course...
that's a high. Time to buy puts.
There we go. Now, of course, there were some other developments in the market today, particularly here in the old after hours. We're watching a couple of earnings. I know, Alex, you said earnings season was done, but there are still some stragglers kicking in, starting off with Activision ATVI. I know this one's a little bit of a non-event because they just had the big pre-announcement last week where they essentially announced they were buying themselves back from Vivendi Universal. We talked about them a lot last week as a result, given how much movement they have, how they're now so far outside of their traditional trading range that they traded in for several years, that 10 to 12 range made them so ideal for a lot of range-bound premium selling type strategies, and even some premium buying if you worked it in the right way. Now they're off to the races, closing today at $18.20. Looks like the number isn't out yet. We'll keep an eye on Activision. I'm kind of curious to how much more upside they can have given just the explosion they've had of late. Of course, we profiled on the show last week someone buying some upside calls out there in SEP, actually doing a little bit of almost a vertical / risk reversal. So interesting to keep an eye and see if that guy was a little bit perhaps too big for his britches, a little bit too early, or if the run has really gassed itself out here. We're also looking on some earnings today for LinkedIn. This one's had quite the run as well, closing today at 213 even. Didn't seem like that long ago we were talking about on the show at 97, and if it would break 100, and here it is trading 213. So quite the run of late for LinkedIn. Looks like the number might be out. It's vacillating a little bit in the after hours. Looking here at the money straddle, they're predicting about a 19-handle move here. So there's some vol cooking here in them thar hills. So we'll keep an eye on LinkedIn as well. And I do also, since we're talking about earnings, and we're about to get into some interesting futures and commodities talk. Of course, CME reported this morning as well, and just showing how capricious the street is. The CME came out, they had reported a 27% rise in quarterly profits, blew through expectations. Of course, the stock closing down nearly 3% on the day today, because apparently that wasn't enough. Matt, you're active out there in the futures realm. Did you pay attention at all to the CME numbers? Did they surprise you, or did that kind of par for the course for what you expected, given all the
par
trading?
for the course. I mean, I don't pay attention a lot. Obviously, they're the preeminent biggest player in my marketplace, but in terms of their earnings, I mean, if you didn't tell me they reported today, I wouldn't have known.
That's my job, Matthew, to fill you in on all the latest earnings developments here. But of course, you mentioned your marketplace. You're keenly watching the various commodities and futures products out there. Why don't you give our listeners a rundown of what really caught your eye in today? Obviously, broad rallies in the equity realm. So what was catching your eye in the commodity landscape?
Yeah, I mean, the movement in oil, the whole outside of natural gas, but, if you look at the products, gasoline, heating oil did an about face here 2 days ago, and you were approaching the highs from 2 weeks ago. If we get through those levels, there's really not a lot of upside resistance in gas, heating oil, crude oil. So, energy traders need to pay attention to those levels. Coffee is a commodity that we've been trying to pick a bottom on, and it broke down 2.5% today's trading, lowest level we've seen in a couple years. And as Alex said, I mean, the jump in yields has kicked bonds, 10-year notes, euro dollars lower, so I think we need to pay close attention to that. The metals market, it's been treading water. The gold market hasn't been able to really get off the mat. It's just been trading right around the 50-day moving average. The U.S. dollar looks like it reacted off the Fed meeting. It's trading higher today, over 1%. So all of the currencies are getting hit, those markets we do a lot of trading in. And then the agriculture market continues to get hit. That's more of a weather play. And you have a lot of farmers selling in corn and beans, so that probably isn't going to end anytime in the immediate future. As long as farmers are selling their crop, we're probably working lower in those products.
Is that what's driving coffee down as well? Just a lot of selling out there, or what's moving coffee down so negatively?
I mean, you have an off year in Brazil, so you have an on year and an off year. So you should have not a monster crop, and you're having a really impressive crop. They built in a freeze premium here, and it doesn't look like we're going to get a freeze. You still have a window over the next several weeks that you could get a weather scare, but 2 weeks ago, a week out, it looked like there was going to be a potential freeze down in South America. It didn't happen. The market spiked up on that, and we've given it all back and some. And the fact that it's an off year in Brazil and you're still getting a really big crop, it's just a story of, your supply is up, the demand is there, the supply's just increased more than that. So I think we're relatively close. I mean, we're at, I think, the lowest price we've seen in 4 years, and I've stubbornly tried to pick a bottom with some clients, just like we're trying to pick a top with oil. But, typically what we do is, we'll play our bias in the futures market, and we'll use options as a way to lighten the load or hedge. So we may buy or sell some puts and calls against our futures, and that will allow us to manage the trade a little, have some flexibility.
Well, we got a good question coming up about that, so we'll get to that in a minute here in the old mail block. But of course, a lot of our listeners who keep an eye on the calendar know that today is the first when we're recording this, and that means it's numbers time, at least from the options market. We get to look back on the month that was July and see how the old business did for last month. And surprisingly, given how it was pretty light volume-wise for most of the month, the total options volume actually looked pretty good last month, at least compared to a year ago. We saw that total options volume in July was up 5.81% compared to last July, which the number for this last month was 324 million contracts. The average daily volume for the month came in at about 14.7 million contracts, up 1% from last July's 14.6 million contracts. So a little bit of surprising strength and robustness there. Year-to-date volume also looking a little bit better than some people expected, up nearly 2% from the same point last year at 2.4 billion contracts. That's billion with a B. Of course, if you pare it down a little bit more to some of the contracts a lot of our listeners are interested in, the equity options, the volume there came in up about 4.3% compared to last July at 295 million contracts. Of course, the equity average daily volume, though, for equity options was actually, surprisingly, the average daily volume coming in a little bit lower. I'll have to I'll have to investigate how exactly that worked. 13.4 million contracts this last July versus a year ago, 13.45. And the equity options volume year to date coming in fractionally up over last year, about 0.2% higher than it was last year at 2.2 billion contracts. So overall, given the fact that a lot of people expected still some customer reticence this year, given the fact that minis haven't maybe been the massive driver of volume that a lot of people suspected, given that the summer's been overall somewhat thin and light, this still are relatively decent volume numbers here for the options market. So if you're watching the volume numbers, watching the market, these are good bellwethers for you to keep an eye on here for all of our active traders in our audience. Good to know that there's still some volume surging out there. No one wants to be stuck in these thin markets that widen out and just then you can't really get anything done. So that's no good for anybody. All right, and that is going to do it for the old trading block. And now we're going to keep on rolling right on into the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, and welcome to the Odd Block. This is, of course, the portion of the show where we discuss some interesting and or unusual options activity that's lighting up the tape today. And first up, staying in the commodities realm, we're going to dive right into GLD, everyone's favorite precious metals ETF, vying up there with SLV on a daily basis. It closed today at 126.61, down about 1%. And we saw someone coming in doing a pretty sizable transaction, putting up about 33,000 GLD October 135 calls for $1.74. Now we dig into that volume a little bit, and it looks like that volume is a closing sale. We see some vol coming off here on that strike. Open interest is 41,000 contracts, so still a fair amount open on that strike. Of course, GLD being one of the big movers in the marketplace, averaging well over 200,000 contracts a day. Still 33,000 contracts in one clip. That's a pretty big bite for anybody to bite off here. Volatility down a little bit in that name, so we could tell that's a closing trade. Now, Matt, I know you focus mostly on the futures and futures options. Do you ever have times when you take some clients and advise them to add some exposure in GLD, or perhaps use GLD as a hedge for some of your futures positions?
I never do, but I find that most of my clients that trade metals are also trading like ETFs, whether it be GLD, SLV, UNG, I mean, you name it, TBT, all of them, they trade them. So usually what happens is they'll put on a position unbeknownst to me, get in trouble, and then ask me what to do.
That's always the best, isn't it? Hey, I did this without telling you. Now, how do I get out of it?
Right. How do I get out of it? Exactly. So, I mean, it appears that there's probably a correlation to gold and GLD, but, you know, if they're trading futures with me or options with me, I usually try to construct a hedge or some type of strategy with futures or options. I'm a lot more familiar. Those are, you know, the instruments that I'm comfortable trading. And, you know, if I think gold's going to move $50 or $100 up or down, or silver's going to move a couple dollars, and they want to take probably a smaller position, you know, the stakes are probably a little bit lower trading the ETF.
Yeah, it's just a little bit smaller, right? A little bit more bite size for retail. A lot of our listeners love to go that route, even though we're seeing more of them migrating into the bigger futures and futures options contracts. And of course, now they have those bite-sized contracts as well, some of the smaller size futures and futures options contracts, which makes it much more friendly for retail. All right, moving on here in the old odd block to one of the names I like to watch. This is Nvidia, ticker symbol NVDA. They are, of course, the graphics card manufacturer du jour. They closed today at $14.64, up about 1.4% on the day. They average lately about 11,000 contracts a day, which is pretty decent volume for them. But of course, they did 25,000 contracts today, a good share of that, nearly Actually, about exactly almost 50% going up in one substantial trade. We saw someone just piling into the Jan 2014 16 calls. Just a love affair with these calls, gobbling up nearly 8,000 in one clip and a total of 12,000 on the day of these calls for prices around 60 cents. The open interest on this strike is about 900 contracts, so this is all opening paper. Now we look here at Nvidia. Of course, they have earnings coming out next week, so it's one of the names we were going to highlight here in Around the Block, but we can chat about it a little bit now as well. Nvidia has been hovering lately ever since the earnings announcement back in May, their last announcement. They've been vacillating in this 14 range, around the 14 handle, almost up to 15. They had one brief spike north of the 15 strike, and that's pretty much been about it. This guy obviously clearly thinking that the future lies north here in Nvidia. Of course, it is interesting to note that there are 14,000 contracts open on the Jan 15 strike as well. So this could be a guy perhaps legging into a stupid. He could be perhaps putting on additional paper here and rolling it up. There's a lot of different things this could be. That could be unrelated volume. But whenever you see volume so close in strikes and such similar size, it makes you kind of wonder, particularly when some of the other strikes around here are 900 contracts, 600 contracts, 6,000 contracts. It does make you scratch your chin and wonder, perhaps someone's legging into one of the two-saw special rolling stupid here. But someone clearly bullish on Nvidia, and not just through earnings next week, but for a while to come. Interesting given the fact that it seems like the dedicated graphics cards market is having some problems. Of course, they have some other hardware they're launching, and of course there are new video game consoles coming out, so maybe that person expecting the release of the Xbox One and the new PlayStation machine to drive demand for more video cards out there. Next up, we have iShares Emerging Markets Index, ticker symbol EEM. This one closed today $39.72. This is the name that does a whopping 400,000 contracts a day. So this one is a mover. It did about 400,000 contracts a day. So when you're looking at that much volume, it's kind of hard to ferret out some of the interesting stuff. But we did find something interesting today here out in September, so a little bit closer to home than the trader out in Nvidia who was playing in Jan. These were the September 32 puts. We saw someone coming in and just gobbling up a ton of them, 34,000 to be precise, for a dime, a total of 36,500 going up on the day today. Now looking back here at EEM, this one's been trading mostly north of that level for quite a while, trading as high as $44 just a couple of months ago. It since has retraced down and has danced with that 36 level. This looks like it probably could be someone, perhaps a substantial underlying holder, picking up some near-term downside protection at a level actually south of that 32 level, drawing a line in the sand there that he wants to perhaps lock in at that level. But interesting stuff here, a lot of volume, a lot of puts going up. Usually we see that many puts going up a little bit out of the money. Usually we like to see them a little bit farther out, but even if that's the near term in September, typically that's indicative of an underlying holder. But you never really know here in the odd block, which is why we love to parse this stuff. Last but not least, we have a big fly going up here in Oil States International. This is ticker symbol OIS. This name closed today $94.68, down about 2.5% on the day. And this one we saw, like I said, a big fly going up actually in March of next year, March 2014. So a pretty sizable long-term fly going up on a wee bit of a ratio. We saw someone coming in on the March 2014 100, 115, 130 fly, buying it to open. They bought 14,000 of the 115s. They sold 8,000 of the 100s and 7,500 of the 130s. The average daily volume on this name, only 3,800 contracts. So this is some sizable paper here on this name. No volume to speak of on any of these strikes. 10 lots across the board, essentially. So this is a sizable trade for this name, and it's a slightly long, and it looks like it's pretty bullish here as well. This guy putting on some interesting bullish positioning here in good old OIS. All right, so that's going to do it here for the old odd block today. Some interesting stuff. This fly, I think we're going to mark down in the to be watched category here for OIS, because it is a very out of the money fly. Very bullish as well. This guy needs some serious movement on this thing for this name to really catch off. And looking at the chart here, this name hasn't really danced or even flirted with those levels any time over the past in the ages. This is a pretty aggressive, bullish, long volatility position here. So we'll have to keep an eye on this one and see how it plays out. So perhaps we shall file OIS in the to be returned to category and keep on rolling right on into our next category, the Xpress Block.
The Xpress Block, brought to you by Options Express. Options Express lets you trade where and when you want for every level of trading. From advanced charting, free daily trading ideas, and free educational resources, Options Express is the online broker for all traders. Best of all, Options Express allows you to trade stocks, options, and futures all in a single account on powerful yet easy-to-use trading platforms, including mobile devices. Visit optionsexpress.com/OXradio for your free account. Options Express is a member of FINRA, SIPC, and NFA.
Now, of course, listeners, this is the old Xpress Block, of course, the portion of the show where Mr. Alex takes the reins and gives us a nice sneak peek behind the curtain over there at Options Express. And now, Alex, usually I send my birdies to go off and spy on Uncle Mike Tusaw, but I had him floating around OX HQ today because I knew Uncle Mike wasn't going to be on the show, and I couldn't send him all the way down to Florida to spy on Matt. That would have been cruel of me. So I had him peeking in the windows at you all day, and they reported back that you guys were pretty busy. In fact, for a non-expiration day, I'm guessing this is probably one of the more active ones you guys have seen in quite some time over there. Are my birdies correct, sir?
They are spot on, and we're going to have to put drapes up to maintain some confidentiality. But yeah, today, I don't have the final numbers yet, but I think today was, if not the busiest non-expiration day we've had this year, very, very close. And the interesting thing is our clientele, we always talk about the difference kind of between our clientele and our parent Schwab's clientele. And our clientele is clearly more derivative oriented, more transactional. And ironically, over the last couple of days, we've done a ton of bond business, not only the futures contracts, but cash bonds. We've done a ton of bond business. And the names lighting up the phone today, I almost felt like I worked in an old Boston asset management house. I mean, today it was Procter & Gamble and Exxon, which had earnings, and MasterCard and Visa, which have, both had news in the last couple of days. Facebook has become a name that's ringing the phones off the hook again, and I think as we're up here at the IPO price, a lot of liquidity is going to sort of come back into that name. People who were sitting on it as a living dead name are now breaking even. And one ironic comment that somebody made the other day was Facebook gets back to the IPO price just before all the complaints hit NASDAQ, just before the settlement. So that's kind of ironic. But it was a very fundamental day today. And, market was up right from the beginning. In the last week, we've been real quiet, and we've had a tendency to sell off at the end, which wasn't the case today and wasn't what we were doing for, a whole 2 months before us. You and I have talked repeatedly about how, I'd write my notes, and 5 minutes before the close, I'd tear them up and start over. Today was just a nice up day. Both sides of me, the securities options side and the futures people, were busy today. The futures people, it was the metals and energy, about what you'd expect. But there was a good tone to today, as they say. We sort of become cynics on the show, and I was kind of waiting for it to cave or lose a little bit today, and none of that really happened. The news was good all around. We took out the highs, and it was a good day.
Yeah, it didn't have that end-of-day retracement we've seen so often of late, where gap up about 1%, maybe close the day up 0.5% or something along those lines. If anything, it got a little bit of extra steam towards the end of the day, which is not something we've seen for a little while. So that was interesting in and of itself, just seeing the market get more more focus, more steam towards the end of the day and keep on rallying. Not something we've seen in quite a while. But yeah, you're right. It is the names you're throwing out there, Alex. It is kind of old school, P&G and some of these names that you don't see light up the tape too often. Exxon, except on days like this when they're moving the markets and making some earnings and making some noise. So yeah, it's funny to see the OX crowd that we tend to cliche and pigeonhole here on the show into the Netflixes and the other things like that. Still loving the old school names like P&G and some of the other ones that they can get in and out to, and still getting some vol and some activity out of those. So they're not just lurking around Facebook, even though Facebook is catching a lot of people's eyes these days, as you said, because we're pushing up on that old IPO level, and the year that was the lost year is finally coming back for those people. All those people who had such great faith in social media just a year ago and had their faith broken on the rocks of reality are finally getting back in and finally getting made whole again by Facebook. All right, thank you for that, Alex. And now we're going to keep on rolling right on into one of my favorite parts of the show, the mail block.
Now it's time to empty the mailbag and see what our listeners have to say. It's the mail block.
Welcome to the old mail block. This is, of course, the portion of the show where you get your chance to sound off. Dear listener, if you'd like to join the rest of your listeners here on the old mail block, be featured in an upcoming show, of course, a lot of ways you can do that. Surf on over to theoptionsinsider.com. You can leave us a comment on this show or any of our other shows, and we'll find those and sort those out for the right shows. Of course, you can shoot us an email, questions@theoptionsinsider.com. Just be sure to put the name of the show you want to write in about in the subject line so we can route it appropriately. Of course, all the old social media still works. You can find us on Twitter, twitter.com/options, or on our newly revamped facebook.com/theoptionsinsider. We've consolidated a lot of those pages, the old radio page and everything else, into one to make it easier for you guys to find us. So you can, of course, send us your questions on Facebook or on Twitter. A lot of great ways to join us, just like a lot of your fellow listeners did today. And we're going to start off with a question from MMax. And he says, can you give us an update on the mini options? And it's a good question, Mr. Max, and a timely one because it is numbers time. Unfortunately, before the show, I didn't have a chance to really dig through the volume of data coming out of OCC to see if I could really parse it for minis. And it doesn't look like they're really breaking that out and making it too easy to find. They rope it all in with the general equity options volume. So I'll have to dig some more and see if I could parse it. But everything I'm hearing anecdotally, Mr. Max, and from talking to trading firms and talking to some other brokerage firms and some of the exchanges, is that so far these products still not really lighting up the tape. I know when they launched back in March, there was some hiccups. I think a lot of us had hoped that by now, several months into their run, coming up later this month on 5 months, that a lot of these problems would have been worked through by now. We would have gotten some of the pricing in line. We would have tightened up the markets, would have shown more liquidity. Unfortunately, that doesn't appear to be the case, and that seems to be still weighing in on the minis market. Now, Alex, you probably have some more salient data over there from OX, or at least some impressions. And I'm guessing you're not about to contradict me on these mini products.
No, you're spot on, Mark. And to your point, it's 5 months in. We looked at these in month one, and we were hopeful and excited. And we looked at them in month two. And here at OX and Schwab, we are between 6 and 7 out of every 10 mini contracts that trade, because we were out front and we promoted it. But it's a disappointment. As much as I would love to put a terrific spin on it, and I still think the idea is good, but the liquidity providers have not stepped up. The only volume you really see is in the front at the money, and markets are still way too wide. Apple, it brought some business into Apple. It's brought some business into the spider. But, you look at those markets, and if you're an experienced option trader, you look at the bid-offer spread and go, yikes, that should be better. Because I can lean on the big stuff if I'm a market maker. So at 5 months in, the best description I can give you is you're spot on, Mark. They're a disappointment. We'll continue to promote them and support them, but the liquidity providers have got to step up, or you won't see more of these. And the firms that sat out on the sidelines and saved money, I hate to say in hindsight, that may have been prudent because they've been, to this point in time, a non-event.
Yeah, I think we're starting to see, I think we commented on this before, we're starting to see the effects of this, the diaspora away from the floor, the loss of so many of the smaller prop shops that would have perhaps provided liquidity in these, now moving on to other things, shutting up altogether, doing some very specific strategies, or even moving on into hedge funds, other things like that. The days of just a lot of these firms being out there to spring up and provide liquidity on some of these new contracts, they're just not there anymore. So, and the ones that are much more reticent about spending the resources to list and trade a new product like this. So they're all playing the wait and see game. And unfortunately, when that happens, we all have to wait and see because nothing's really going up. So unfortunately, that's the summary we have for you, Mr. Max. I wish it was better news. I wish Alex had some nugget of spontaneous explosion of minis use over there at OX, but unfortunately, that's not the case. All right, next up, actually, before we roll on from the minis, there is a little bit of a bright spot in the mini options. Of course, it's not on the equity side. It seems like the minis are doing far better over there on the futures side of the fence, Matt. I mean, it seems like, every time I talk to those guys over at the CME and others products, the shorter duration, smaller price, bite-sized type contracts really seem to be gaining a lot of steam, probably because they're being listed and traded in a much more active fashion than we're seeing the slow adoption rate over here on the equity option side of the fence. Do you ever find yourself using these for your clients, these kind of shorter duration, smaller bite-sized type contracts?
Yeah, absolutely. I mean, when the markets get extremely volatile, which, I mean, oil to swing the way it has of late is a perfect example. And some of my clients think they're less of a man if they trade a contract that says mini in it. But, at 500 barrels versus 1,000 barrels, it's still swinging a pretty big bat. And on silver, it's 20%. So 1,000-ounce contract versus 5,000 ounces, and then the mini gold contract is 33 1/3 versus 100 troy ounces. It's a product I use often for small clients, large clients, especially in the futures market. I'm curious to think if there'll ever be options on the mini contracts. Do you think anything like that would exist? Because all the options trade off the standard contract. Do you think they'll ever get to a point where there's options on these mini contracts?
I've been trying to push them down that road, and it seems like there's some interest because the underlying is doing so well. So I wouldn't be surprised if we start seeing more movement.
So a lot of my clients have inquired about that.
Yeah, because the CME is quite pointedly trying to go after retail more, and these products are a clear way to do that. So now that there's some traction with the underlying, the options on all of these products really seem to be a no-brainer.
I'm obviously not a spokesman for the CME, but the CME in a lot of ways has done a great job with the electronic platform of bringing options forward. And as I said, I don't have a crystal ball here, and I sit kitty corner from the what I would call the old CME building, but they've been in many ways much more innovative in what they've done in options. I mean, as you talked about earlier, Mark, the ETF community, the GLD and the SLV have served investors well, but if you start to look at things like the electronically traded options on the light crude or the COMEX gold, I'm an old guy, I still call them COMEX and NYMEX. They're all CME. Those things trade like water. I mean, they're liquid, they're deep. You could fill them electronically. You can do two-legged spreads, and they're clearly a factor. I mean, we've all talked about the growth in futures option contracts. I hate to kind of drag out the crystal ball and say, that the growth is going to be exponential, but as the futures industry evolves, here's the good news. The good news is you can trade options on the E-mini, great, deep, liquid. You still can't trade options electronically on the big S&P contract. So there's still a country club mentality in some of the products and an innovative mentality in other products. If they're clever, they're going to option the mini contracts. because that's the direction the world is going.
Yeah, I wouldn't be surprised to see a lot more momentum. Talking to those guys, we do a show with them on a regular basis, the long and short of futures options. Listeners, if you haven't checked it out, I encourage you to do that, where we get into topics just like this and some of the growth. And every time we do that show, the narrative is always the growth is in the shorter duration, smaller premium type contracts. That's just where all the action is. So it's just a no-brainer that they're going to keep adding more of those to the mix, because that's what people want these days. Even the larger clients, they want more nuance a lot of times, a little bit more variability in what they can trade. So they can trade a big contract if they want, or they can do some combination of the smaller ones. And people seem to like that. Let's look at the success of the E-mini. That thing's just tailor-made for that stuff. All right, keeping on rolling here with the mail block. This one's right up your alley, Matt. I'll kick it off. I'll give you a chance to ponder it, because you're new to the show. You haven't had a chance to weigh in on USO. We've beaten it up many times here on the show in the past. This question comes in from Mr. George Roop out of good old Nashville, Tennessee, and he writes, can you explain why the hosts take such a dim view of USO? It's really one of the few viable ways for retail to make longer-term bullish bets on oil. And I would say, I can't speak obviously for Mark or Uncle Mike, who've bashed it as well on the show many times. I'll let them speak for themselves. But in my point of view, the issue I have with USO is almost exactly what you said. Retail views USO as this great proxy for oil, and it really isn't. It doesn't really move well with the oil at all. And in fact, if you dig into the prospectus here on USO and their USO fund, which runs it, they say they invest in futures contracts for light, sweet crude oil, heating oil, gasoline, natural gas, and other petroleum-based fuels that are traded on NYMEX, ICE, and other U.S. and foreign exchanges collectively. So a lot of retail make the same assumption that you do, George, that this is just some sort of great one-to-one matching tool for the oil underlying, kind of like a GLD or SLV, when in reality it's more of this basket-type product, and it tends to reflect more overall energy than any single oil contract. And so it's not going to move one-to-one or sometimes even at all with what oil does. So a lot of people come in, they make that mistake, or they don't think they can do a big bet on a future or anything like that, so they want to come in and they pick up USO. If you're into the general energy trends, I suppose USO can be your friend, and you want to bet on those. But if you're looking for specifically oil, like in your question here, George, unfortunately, USO, not the beast for you. Mr. Matt, what's your take here on USO and so many retail seeing it as this great proxy for the big oil future?
Well, it's funny you say that, because I was reading the same thing that you were reading almost verbatim in terms of all the other products it trades. And then I tried to pull up a chart of USO, and I'm not sure I'm looking at the right thing. It looks like it's trading around $36, $37. Is that correct?
Yeah, closed today at $38.27.
Okay, so I look at what it's done, say, in the last year, and it's traded between 36 and 38. And then I look at what oil, just the WTI, has done in the last year, and it's traded, maybe call a low just under $80 and a high of 107. So you'd think you'd have more movement in USO when you've seen oil high to low move about 20-25%. And this has moved about 5% high to low. And another misnomer, and this could be me just not knowing USO, supposedly it trades the front month, and then it has to roll every single month. And, I guess that works okay now where the front month is higher, so you're rolling it and you almost get a discount. But there's times when you're losing in the carry every single month when the premium every month you go out is higher. So, there's just too many problems that I see in it as well. For a long-term buy and hold, I don't think it's the best vehicle.
Yeah, you're talking about, of course, the roll risk there, and, of course, that's very dependent on the term structure of what you're looking at. But in a lot of scenarios, you're right, Matt, it's going to be bid up in the farther off months, and you're paying a great premium if you're going to keep rolling front month every month as opposed to quarterly or 6 months, something like that. So, yeah, it all really depends on how they execute these things as well. There's so much minutia that goes into it, and as Matt just outlined, not exactly a good one-to-one mirror of oil. Maybe we'll save the other question he has about longer-term bullish bets for another day. We have a quick question here coming from George S. He writes in, what about the dividend trades? Are they still going up? This is a timely one, actually, because, of course, the numbers just came out for the overall industry. And we reported a couple months ago here on the show, OCC made a tweak to their clearing methodology to try to aggressively restrict the way people can do these dividend trades. People now have to be net long actually on these strikes. So people were just doing wash trades all day back and forth between the firms, trying to set up offsetting long and short positions on the same strike. And OCC kind of put the kibosh on that and said, nope, you have to be net long. Of course, I kind of instantly wondered, well, what about just legging into verticals then? And it looks like their change has been beneficial. It's reduced the overall number, but they're still going up. Div trades made up 1% of overall industry volume last month. That's after this change went into effect. So they're still going up. They're going up less than they have been. If you look at other years, div trades make up somewhere between 5 and 8% of overall industry volume. So probably 5 to 6.5, maybe more aggressive there. So somewhere in that range. So only doing 1% last month. Clearly there's been a reduction, but still is some work to do. Of course, money always finds a way, and there's a way to take advantage of these dividend trades. People will find it. All right, that's about all the time we have for the mail block today. Thank you to everyone who wrote in, and now we're going to keep on rolling right on into our final segment, Around the Block.
Around the Block.
All right, everybody, welcome to Around the Block. This is, of course, the portion of the show where we tell you what we're watching on our collective trading screens for the rest of this week into the weekend. Of course, we touched on it on the show at the beginning of the week. Non-farms lurking in the crosshairs tomorrow. I think a lot of people are keeping their powder dry ahead of that one. Of course, with the big numbers we saw today, that tends to put some certain expectations on the number tomorrow, given that we saw the manufacturing and the unemployment really surprised a lot of people today. We'll see if non-farms can follow suit or if there'll be just a resounding meh in light of all the good news we saw today. Of course, there's some other things lurking on the horizon as well. For all you options traders and investors out there, SIBO has their earnings call tomorrow before the open. So hopefully, if you were trading it, you got in because it's too late now. Of course, they are before the open, and it looks like they closed today $50.80. And Alex, that's just crazy to me. SIBO trading $50. I thought they were getting a little rich when they got into the 30 handle. Now they're 20 handles north of that. So there's been a lot of run up going on over here in the SIBO. Looks like they're pricing that 50 straddle at about 260, 280. Of course, it's got 80 cents of juice in it, so it's got $2 of premium there. Of course, juice and premium, someone wrote in about those questions as well. We'll get to those on another show. I know we throw those terms around a lot. They can be confusing. Don't worry. We'll define them again for you. But, SIBO looking at about a $2 or so straddle, so it looks like there's expecting a little bit of a move here. We'll keep an eye on that one as it opens. Actually, you'll be able to see it as the show comes out tomorrow because it comes out before the open as well. We also have Groupon coming up next week on the 7th. Disney, a big name, making a lot of news lately with Star Wars and all the other acquisitions, coming out on the 6th. Your favorite, Alex, I know a lot of OX customers' favorite next week, Tesla. I know you're watching this one. The name that just can't seem to go down. Let's see where they closed today. Maybe they finally, nope, they rallied 1% again today. So they can't go down. This name cannot go down. It's incredible. And we touched on Nvidia earlier in the show. Someone loading up on a lot of upside there. They have earnings next week on the 8th. Of course, that upside play wasn't exactly for earnings. It was out to January. So, of course, if they get a nice bump in earnings, this guy won't be upset. But he's not exactly positioning for earnings. He's making a longer-term bet on Nvidia is going to light up the tape. That said, Mr. Alex, what else are you watching? What's in your crosshairs for the rest of this week into the weekend?
Keeping a keen eye on the 10-year, up over 270. As I kind of said before, that kind of gets a little worrisome. Up over 270. I think it's going to start to be a drag on the market if we get up to the 3% area. Crude looking near 110. Again, I think that's a little bit of a surprise to all of us. And we're starting to look towards Washington for the September budget talks, what they're going to do about sequester. But that wasn't that much of a concern at the beginning of the year. I think now we're going to really start to look at debt ceiling and what's going on there. If the dysfunction continues, we're at a level where it's going to be hard to keep going up.
And Mr. Matt, what's in your crosshairs this week? Coffee, oil, nat gas. What are you watching for the rest of this week here?
All of the above. I'm paying attention. I live in Miami, but I'm paying attention to the weather in the Midwest because that's what matters for crops, corn, bean, wheats. Like Alex alluded to, energies, gets to the point where prices get high enough where you start to see that be a deterrent for demand. I think we're relatively close in the products in crude. On the other side of the spectrum in energies, natural gas looks too cheap. I want to see how gold, if we can wander away from this 50-day moving average. It's served as a magnet here for going on 2 weeks. And last not least, my chart of the day today, the dollar. Let's see if this is more of just a dead cat bounce or, where the dollar goes with the ECB and Bank of England doing nothing today, keeping rates as is at 0.5%. Looks like we could catch a bid on the dollar, and therefore, the Swiss franc, euro, pound, some of these currencies look like they're headed south short term.
All right. Thank you for that, Matt. And that is, unfortunately, all the time we have for today's show. But before we go, let's do a quick check-in with each of my cohorts, my partners in crime, to see what they have cooking in their respective necks of the woods. Mr. Alex, let's start with you. What is coming up in the land of Options Express education?
I'll just focus on 3 events. Monday, we're doing an evening webinar, and it's part of a continuum. So it's intro part 1 into options, and Joe Cusack is going to talk terminology. Tuesday, we have 2 futures webinars. Dan Gramza from the CME is going to do a webinar on Fibonacci retracements. And then a couple hours after that, Jim Wyckoff, who writes the well-known Wyckoff letter, is going to talk about his monthly futures outlook. And as I mentioned, I have no voice. I was in meetings all day today. We are putting a new build to bed shortly here at OX. And one of the features in that build will be the single leg walk limit. So that's in what we call build 13.4, and that will go to the product development people, and hopefully it will be out here in the third quarter. Ideas Hub for Futures is in 13.5, which hopefully will be the fourth quarter, but 13.4 goes to bed this week.
All right, I know a lot of our listeners are excited about that and that single leg functionality coming to them. All right, and Mr. Matt, tell our listeners where they can find your fine line in the sand and all the other newsletters that you write over there at RCM.
Yeah, absolutely. And just right on our website, RCM Futures, find research. Myself, I write 3 pieces, the line of the sand, chart of the day, and the commodity wrap. And then we have 2 other individuals, Doug Bergman and Kevin Davitt, that also write pieces. Kevin focuses mostly on energies and metals, and then Doug is our ag specialist, so he's very busy this time of the year. He writes 3 pieces daily on the agriculture market.
Great. So if you're one of our listeners out there, I know there are many of you who are looking to do more in the futures and futures options realm, then by all means, check out what Matt and everyone else over at RCM has cooking, including his line in the sand weekly newsletter and a bunch of other stuff cooking over there. And of course, stay tuned for our forthcoming futures options program coming to a podcast provider near you very soon. I know I've been promising that for a while, but trust me, it's coming and it's going to be worth the wait. And we'll see you next time right here on the Option Block.
Become a part of the Option Block. Just visit www.theoptionsinsider.com/forum to post a question for the hosts. You can also submit questions to twitter.com/optionblock or leave a voicemail at 312-544-9356. Make it interesting and your question just might make it on the air. The Options Block is property of the Options Insider Incorporated. All rights reserved. preceding program was a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com/radio or search for Options Insider Radio in iTunes.